The relative strength index is a momentum oscillator that measures the speed and the change of the price movements. Hello my friends, in this video we are going to talk about how to use RSI indicator in the Forex market. The RSI oscillates between 0 and 100. Traditionally, the RSI is concentrated overbought when above 70 and oversold when below 30. Signals can be generated by looking for divergence and failure swings. RSI can also be used to identify the general trends. How to find signals by using RSI. RSI is considered overbought when above 70 and oversold when below 30. These traditional levels can also be adjusted if necessary to better fit of the security. For example, if a security is repeatedly reaching the overbought level of 70, you may want to adjust this level to 80. During strong trends, the RSI may remain in overbought or oversold for extended periods. RSI also often forms charts patterns that may not show in the underlying price charts, such as double tops and bottoms and trend lines. Also look for support or resistance on the RSI. In an uptrend or bull market, the RSI tends to remain in 40 to 90 range with the 40 to 50 zone acting as support. During a downtrend or bear market, the RSI tends to stay between the 10 to 60 range with the 50 to 60 zone acting as resistance. These ranges will vary depending on the RSI setting and the strength of the security or the market's underlying trend. If underlying prices makes a new high or low that isn't confirmed by the RSI, this range can signal a price reversal. If the RSI makes a lower high and then follows with the downside move below a previous low, a top swing failure has occurred. If the RSI makes a higher low and then follows with the upside move above a previous high, a bottom swing failure has occurred. I I know it's a bit complicated, but I try to make it more understandable for you guys. Okay, let's talk about calculation of the RSI. By using the formulas above, RSI can be calculated where the RSI line can then be plotted beneath an asset's price chart. The RSI will rise as the number of size of positive closes increase, and it will fall as the number and size of losses increase. The second part of the calculation smooths the result, so RSI will only near 100 or 0 in a strong trending market trading view. The RSI indicator can stay in an overbought region for extended periods while the stock is in an uptrend. The indicator may also remain in overload territory for a long time when the stock is in downtrend. This can be confusing for new analysts, but learning to use the indicator within the context of the prevailing trend will clarify these issues. How to determining the trend using RSI? RSI is a very popular tool because it it can also be used to confirm trend formations. If you look a trend in forming, take a quick look at the RSI and look at whether it is above or below 15. If you are looking at the possible uptrend, then make sure the RSI is above 15. And if you are looking at the possible downtrend, then make sure the RSI is below 15. RSI goes below 15 on a downtrend. At the beginning of the chart above, we can see that a possible downtrend was forming. To avoid fakeouts, we can wait for RSI to cross below 15 or confirm our trend. Sure enough, and RSI passes below 15, it's a good confirmation that a downtrend has actually formed. Okay, that's all. I hope you, my friends, can use these tips and indicators. As always, please do not forget to like this video and subscribe our channel. Thank you.